Good morning, students. Hope you all are doing well. Can everybody please turn their camera on? We'd like to see your bright and shiny faces. Thank you. Good morning, everyone. Mr. Richards, how are you doing today?
Good morning, Rhonda. Good to see everyone back this week and excited to learn some more about what's going on with their SMG stock market game that we've been doing. And I hope you all are excited to learn a little bit more also today. So let me ask a couple questions, and I'm going to pick on people because I know better by now. Number one, who's noticed a lot of changes in the market over the past week or so? I'll say Elijah. Have you noticed anything? And he says no. Well, there's a lot been going on in the market, especially within the banking sector. Who can tell me what has been going on in the banking sector? It's a pretty big deal. Marilyn, Isaiah?
I don't know.
All right. Okay. Okay, so right, Isaiah says it seems like the market's been going down. Some folks don't have any clue. I see, I'm just reading the chat here. All right, and so once again, this is a safe space, all right? So if you don't know, that's fine. If you do know, great, even better. But I would challenge you all to start looking at, or especially maybe challenge as well with your parents, start looking at things like CNBC, CNN, a lot of different information comes out in those spaces as well. So last week, basically around this time, Silicon Valley Bank that was closed by the FDIC. Okay, and so that's what's called a bank failure. So we won't go too much further into that, but that's a big deal, right? Because it affects the stock market as a whole. It affects the stability of the stock market as a whole. And so that's one of the reasons, or probably a big reason, why a lot of the stocks that you own potentially have gone down in value. Because once again, when you're talking about stability and things like that, that's one thing that could affect it. Okay. So keep that in the back of your mind. I would say try your best to maybe one day out of the week, jump on one of those type of shows. You can go on Yahoo Finance, just like we've been using Yahoo Finance to find out a lot about that information. They'll give you daily updates as well. So Yahoo Finance, Morningstar, like we've been using as well, or any of the other resources that are available in the SMG game, will give you access to other additional news. All right. So no matter how much research you do on a sector, on a stock, or so on, the world is still going to go on, and those things can affect the stocks that you buy. So basically, if you bought any banking stocks, they probably all went down, because it's just, you know, it's a ripple effect. It's a domino thing. If one gets affected, then the others will. Now, I think that that's just an example of, you know, why you do your research, why you understand your risk tolerance, and why you understand your time horizon. So if you bought a banking stock, and this isn't all banking stocks, this is just basically a certain sector within the banking structure, okay? But if you bought one, based on your time horizon, based on your research, typically, unless it's something severely catastrophic, that should either spur you to make a change or not make a change. So that's something that you want to keep in mind when you're doing your research and so on. So any questions on any of that stuff that I kind of mentioned? Okay. All right, so today we're going to keep class moving. I'm going to share my screen in a little bit, and we're going to talk about additional market analysis, and as well as looking at what bonds are, and then also kind of just talk about, go around the room, see how everyone's faring with their portfolios. And so 1 second here, I'm going to go ahead and share my screen. Sharing.
Fundamental analysis, earnings, and quarterly earnings reports. Would you rather buy, invest in, an iPod or an iPhone? How about a CD player or a smart speaker like an Amazon Echo or a Google Nest? You probably answer that the iPhone and the smart speaker are the better investments because they're new products. But did you know that your demand for new products affects stock prices? Stock prices may fluctuate for several reasons, including the introduction of new products to the marketplace. Investors use a form of stock analysis called fundamental analysis to determine if a company's stock is a good investment. Fundamental analysis is assessing a company's financial history and earnings, as well as analyzing outside factors like demand, news, current events, etc., to determine if it is a good investment. Earnings is the profits that remain after subtracting a company's expenses from its revenue, money collected for products and services. Public companies must produce a quarterly earnings report once a quarter or 4 times a year for investors. Investors carefully read these reports and base their opinions about the value of a company on its current and projected possible future earnings. We've already looked at an example of how consumer demand for new products can affect a company's value and stock price. Other factors besides new products can drive demand, such as change of season, natural disasters, holidays, and more. Now let's use fundamental analysis to analyze 2 other companies and their value. Example 1. Toys for Everyone is a medium-sized toy company. The company's CEO has decided that the company is profitable enough to donate 1 toy to a child in need for every toy purchased at its stores. This new decision has given the company a lot of positive press from news outlets. How do you think the positive news coverage will affect the company's stock price? Take a few moments to write down your response. Toys for Everyone is an example of how a company's decision made the news, which may affect how the public values the company. Now let's use fundamental analysis to analyze another company's value. Billy's Burgers is a fast food chain. The company has been teasing the release of their new spicy veggie burger for months. When they finally added it to their menu, their competitor, Patrick's Patties, released a similar spicy veggie burger. Billy's Burgers' quarterly earnings report was published for investors, and it shows that their sales were lower than what the company and its investors were expecting with the release of their new product. How do you think the company's quarterly earnings report will affect the company's stock price? Take a few moments to write down your response. Billy's Burgers is an example of how a company's quarterly earnings report may affect how the public values the company. Questions to consider. List 2 factors you should consider when completing fundamental analysis on a company. Select a stock in your portfolio that is most likely to be influenced by the news and explain how current events may increase or decrease the value of that stock. Thanks for watching.
Okay. So we just watched that particular video on market analysis. And so this goes back to a little bit of what I was talking about in the beginning of things that could happen in the news, as well as time. And so who could give me just a general stock or stock that they may have in their portfolio? And let's maybe break it down and talk about what things could happen in the news that might affect it, good or bad. Let's say Noah. Noah? All right, let's try Trista. All right, Marilyn.
Best Buy.
Okay, Best Buy. All right, so Best Buy, what are some things that could affect Best Buy from a news standpoint? So let's just see, I'll rattle a couple off or one or two off. And then let's see. So let's just see, Best Buy. Let's just say from a supply chain standpoint, they purchased too few TVs and 4th of July is coming up, or a big holiday is coming up. And they typically have a big rush on TVs, and they were planning to put a sale on TVs as well to drive foot traffic into their stores. But from a supply standpoint, they ordered too few, or they did not work with their supplier effectively, and only a certain amount of TVs showed up, and so the other TVs are on back order. So with COVID, that's happened a lot. So that's a supply and demand situation. So now you have people in your stores that want to buy TVs. You're unable to profit from that because you don't have the TVs to sell. And so that could drag down your sales. That could drag down at some particular point when you review earnings and so on, that earnings are lower for that particular quarter. That ultimately could definitely drag a stock price down. Okay. Marilyn, what's something you would think would affect that stock price also with Best Buy? No wrong answers.
Maybe like the quality of their products.
Awesome. So once again, that could be a supplier issue. Okay. Or so, for example, the supplier has a certain standard. You and Best Buy and the supplier made arrangements as to the certain standard and quality that they would expect from the product that they're receiving. I then go out and start selling that product. As clients start to take it home, there's an issue. I would say a prime example of that, maybe 5-10 years ago, I would say Samsung had that issue. They had a couple washer and dryers catch on fire. Okay, so that's not a good look, right? At the end of the day, it's basically really simple. It's not a good look. People are going to remember that. And so for years, I can say when me and my wife bought a house, and we were looking to furnish it and get a washer and dryer, we initially stayed away from the Samsung washers and dryers at that particular time because we were still skeptical about the quality. They've since fixed that, and we have a Samsung washer and dryer now. But nonetheless, at that particular time, we wanted to avoid them and definitely, you know, find something else to do there. So we're going to pivot a little bit here. There is a pop quiz, yay, that we need to take. Once again, it's not, you know, nothing to fret about. This once again is just assessing where you are in the program, so we can know if we need to make changes going forward and so on. So I'll go ahead and turn it over to Rhonda here in a little bit. Or Rhonda, you let me know when you're ready, and I'll turn it over to you as such.
Okay, we're ready. All righty, class. I am placing the link to the exam in the chat. Please go to that link, and I'm going to help you with the first questions, and then the rest of the questions you are on your own. So please let me know when you have opened up the link. Please give me a hand signal. Use the hand signal button letting me know when you have opened up the link so that we can all start together. Elijah, Kaseen, Marcus, Trista, Zylan, Zion, and Noah, we're waiting for your hands to be raised on the screen so I can see that you are ready to go, so that we can start the exam. Isaiah, Kaseen, Marcus, Trista, Zylan, Zion, and Noah, please turn your screens on. So Trista, in order to raise your hand, there is a reactions button. The reactions button is at the bottom of the toolbar, and it has a hand clap, thumbs up, a crying face, a funny face, a heart, and a party thing. So it's in the under the reactions button is where you raise your hand.
She's got her hands up now.
Okay, great. Where are the rest of our students? Kaseen, Marcus, Zion, Isaiah. Kalani, you just joined and we're getting ready to take an exam. I'm getting ready to put the link to the exam in the chat so you can see it, because the link only shows when you've already been in the class. So Kalani, when you have hit the double link to the exam, please put up your hand sign letting me know that you have completed it so that we can start the test together, because there's some questions that you don't know the answers to that I need to help you with. Just a couple, not that many. So Kaseen, Marcus, and Zion, we're waiting for you. Everybody, please turn your camera. Yes. Yes, Zion.
Here.
Okay, great. Can you go to the exam, please? And can you
Yes.
and can you hit your raised hand button, please?
Okay.
Kaseen, we're waiting for you.
How do I press the raise hand button?
Kalani, how we doing?
Good. I'm just doing the pretest.
No.
They
I
used
asked you to raise your hand. Let me know you're where the pretest is, and we're going to start it together. Because I have to I have to help you
okay,
with some of
sorry.
the questions. Okay, great. Kaysine, where are you? Hello. So finishing this pretest today is something that we have to do for our national office. And they're going to have a copy of this pretest, and they're going to let me know if you took it or not, because that's one of the requirements for you getting the stipend at the end of the class. So I highly encourage everyone to take the test. Now we're going to move on to the test. The first question is, name the 100 Black Man chapter. The answer to this question is Las Vegas, Nevada. So just say Las Vegas. The Las Vegas chapter is the first answer to the first question. The next question should be your first and last name. You should know that one. Second question is city and state. That's Las Vegas, Nevada. Next question is your age. You should know that one. Next question is your grade level. You should know which grade you're in. And the sixth question is program start date. Your program start date was January 21st, 2023. January 21st, 2023 is your start date. And after that, you should be able to answer all the questions following that. Once you have completed the exam, please take your hand signal down so I know that you have completed the exam.
Can you repeat the start date again? Sorry.
January 21st, 2023.
Thank you.
Mm-hmm. Who is the person with the Zoom username that just joined us?
Jerice.
Okay, so you're on two devices?
No.
Okay, so we're taking an exam right now.
Uh-huh.
And do you see it in the chat? Do you see the link to the exam in the chat?
No.
Okay, so for you late joiners, I'm going to include the link in the chat. And I believe you and one other person just joined. Leverty, I believe you just joined. I just put the link in the chat for the exam. Please go to.
I was here.
You've been here? Okay, great. Have
Yeah.
you finished the exam?
Yeah, I just did.
Okay, great. For the gentleman who just joined, please go to the exam. The two questions you need to know. The first question is, the name of the chapter is Las Vegas.
Uh,
And question number 6, program start date is January 21st.
okay.
The rest of the questions you should be able to answer.
Thank you.
Uh-huh. We're gonna give you 2 minutes to finish the exam, and then we're moving on with class. You have 2 minutes. Okay, Mr. Richards, take it away.
Okay, I'm going to go ahead now and share my screen again. We want to keep it going. We only have a certain amount of time. So again, and so we wanted to dive into bonds a little bit. So I'm going to share my screen a little bit here, and then we're going to talk about bonds and beyond. So one moment, please. Just get this.
Building your online business? Go.
Okay.
Bonds and beyond. In this video, we're going to learn about asset allocation, asset class, wealth preservation, bonds, coupon rates, face and par value, and maturity dates. Asset allocation is an investment strategy that balances risk and reward by spreading your investment across asset classes based on your financial goals, risk tolerance, and time horizon. Asset allocation prioritizes the overall portfolio instead of individual investments and aims to minimize volatility and maximize return to help you meet your long-term financial goals. So what is an asset class? An asset class is a group of investments that share similar characteristics, are subject to the same regulations, and often behave the same in the market. The most well-known asset classes are stocks, bonds, and cash, all of which are available in SMG. Other asset classes include real estate, commodities, currencies, futures, and options. Investing in different asset classes and adjusting your asset allocation as you get older and your circumstances change is an effective way to preserve your wealth, meaning safeguard your money for the long term. While building or growing wealth focuses on investment returns, preserving wealth focuses on allocating your investments into assets like bonds to protect your money against factors like inflation and market fluctuations. This is especially important when you experience life changes, such as buying a house or starting a family. It is also important as you get older and closer to retirement. Wealth preservation allows you to afford your future lifestyle with potentially lower or no income. Bonds are one of the main asset classes used most often in asset allocation and wealth preservation. Bond coupons provide a predictable cash flow of interest payments that add to portfolio returns, and bonds as an asset class typically perform well when other asset class prices are falling. Companies and federal, state, and local governments issue bonds to raise money, finance new projects, maintain operations, or refinance debt. A bond is a loan made by an issuer or borrower to a lender or an investor. The issued loan amount is called the face or par value. The issuer pays a coupon or interest payments on the face or par value to the investor. The coupon rate or interest rate on the bond determines the amount of the coupon payment. Most bonds are issued in $100 or $1,000 increments and mature at face par value. Issuers pay coupons to the investor until the bond matures, reaches its end date, and the face par value is paid back in full. The maturity date is the day the bond issuer must pay the bond's face par value back to the lender. On maturity, there are no more coupon payments left and the bond ceases to exist. There are 3 types of bonds you can invest in the stock market game. Corporate bonds are issued by companies. Municipal bonds are issued by state and municipalities, towns or cities, and government bonds are issued by the U.S. Treasury. Corporate bonds typically have a face value of $1,000, municipal bonds $5,000, and most government bonds $10,000. The actual market price of a bond may be different than its face value. Bond prices, like stock prices, depend on factors including the overall performance of bonds as an asset class in the current marketplace, the credit quality of the issuer, the length of time until maturity, and the bond's coupon rate compared to the current market interest rates. Generally, if a bond's coupon rate is higher than current market interest rates, its price will be higher than the face value and vice versa. Check out the Entering Bond Trades video for some bond research tips and step-by-step instructions on how to enter a bond trade in SMG. But before you dive into entering bond trades, here are some questions to consider when researching bonds. For corporate bonds, do the companies in your portfolio also offer bonds? Why do you think the company is selling both stocks and bonds? And why would it be beneficial to own one or the other or both? Municipal bonds. Find your hometown in the SMG municipal bond list and research why your town is raising money in the bond market. If you can't find your hometown, search for nearby towns. Government or Treasury bonds. Why do you think governments borrow money? What have U.S. Treasury bonds paid for throughout history? What is the U.S. Treasury using bonds to pay for today? Thanks for watching.
Okay, So we just went through the video on bonds. We're going to go through another video here in a couple minutes here, but just to talk about the bonds for a second here and understanding them a little bit more. So they broke it down. There's corporate bonds, there's municipal bonds, and then there's also government bonds. So one of the questions you want to ask yourself when you're looking through your portfolio, do these companies potentially that I already own also have bonds, all right? And why are they issuing a bond? So a company might issue a bond to basically help to build out a new facility. It's a great way for them to get loan money, really, without having to go right back to the bank and borrow against that money. So they may be doing that. They may be using that money to secure equipment for their business. They may be doing it. There's a lot of different reasons they may be doing that. So, for example, moving on now to municipal bonds. Municipal bonds are typically issued by your local government. So, for example, Clark County, and so on. So I moved here from Florida. In Florida, we have a lot of toll roads. And so toll roads, though, those roads were built with bond money or municipal bond money. And how those particularly would work would be that the municipality or that local government would issue those bonds to build that road. And then how are they turning around and paying back the person that they lent the money to is basically by every time that someone uses that toll road, it collects a toll. And then that is given back to the municipality. And then that money is then paid back out to the bondholder on those situations. So those are an example of what a municipal bond would do on a high level. And then you have your government bonds. And so right now, I think it's in the news also where they're talking about raising the debt ceiling. And every time around this time, when it's time to determine raising the debt ceiling or not, and how are we paying for this and that, and how are we going to pay to create the new infrastructure and all those different things, the government would issue new bonds to help pay for that. So once again, if you buy a government bond, then you're lending the government money in order for them to either improve the structure of a bridge and so on. So it really just depends on the municipality or the company if it's a corporate bond. And for municipalities, it's the local government that would issue those bonds. And then for government bonds, then you're looking at, what are they trying to do? Are they trying to then be able to increase the debt ceiling? Are they trying to be able to do widespread, fixing? Are they looking to try and pay for programs? So, maybe there's after school program that the government is sponsoring. They issue bonds to pay for those things. And so those are some of the different aspects of bonds. The other thing to think about with bonds, which is very important, is the credit worthiness of that bond. Okay. And so that's determined based on the strength of the company. So when you have a government bond, I'll start at the top there, a government bond, those are typically going to be very secure, because if the government goes down, well, we're all in trouble. So that's one thing to consider there. So those are typically the most secure, but because they're the most secure, they may pay less. Okay. So that's one thing with government bonds. They may pay less, but they're more secure. Then you'll have your next level below that would be typically a municipal bond. Okay. Municipalities have failed in the past, so they do come with a little bit more risk. And so that just basically means it was difficult, or that municipality or that local government had difficulty paying back the bonds that they issued out. Okay. And so typically the government would typically come in and bail them out, or furnish them with cash to be able to pay back the bonds or the coupons on their bonds, okay? So municipal bonds, they're still are very, very secure, but they have a little bit more risk versus a government bond. And then lastly, corporate bonds still are very secure, but they have much more risk than a government or a municipal bond. And as a corporate bondholder you are now that's considered basically senior debt. So if that company were to go out of business, then typically, along with other senior debt, the corporate bondholders would be paid out first if that company were ever to go out of business. Now, being that there's much more risk with a corporate bond, they typically would pay a higher rate of interest, or so there's ability to make a little bit more money because it's basically a balancing act of the higher the risk, the higher the return. Same thing with the stock market. So just understand that a little bit in regards to corporate, municipal, and government bonds. Okay. Any questions? All right. All right, we're going to round it out with one more video on entering bond trades. And so let me go ahead and share my screen one more time.
This $30,000 check from the government just because I own a house in Nevada. I don't know about you, but my electric bill.
Entering bond trades. Before we dive into entering bond trades in your trading portfolio, we want to stress the importance of doing your research. Two great websites to start your research are Emma and FINRA's Bond Center. Direct links to those sites are in the description of this video. Emma.msrb.org can assist with your municipal bond research. Click on your state to access a list of bond issuers and CUSIPs. FINRA-markets.morningstar.com/bond center is another excellent bond resource. You can click search, select the bond type, and enter the CUSIP to look up information on a specific bond, or just select the bond type and click search to receive a list of bonds. Now, we'll walk you through the bond trade page in your stock market game trading portfolio. Visit www.stockmarketgame.org and click Login. Then enter your student trading portfolio ID and password. Navigate to the Enter a Trade page by hovering over Trade and clicking Enter a Trade, and then click Bond Trade. The stock market game has a selection of municipal, corporate, and treasury bonds from the open market available to trade in your trading portfolio. These bonds are investment grade with S&P ratings of BBB or higher. You can browse the bonds available to trade by clicking Search for Bonds. For corporate bonds, enter text to search for bonds issued by a company. For example, you may be interested in searching for bonds issued by Microsoft. Type in Microsoft and click Search Corporate Bonds. For municipal bonds, search for bonds issued in a state by selecting the state in the dropdown and clicking Search Municipal Bonds. You can also add in text to narrow your search. Finally, click Search Government Bonds to see a list of all tradable government bonds in the SMG system. You can click the bond symbol to learn more about the specific bond. Please note that the CUSIP number is a unique identification number assigned to all registered bonds. In SMG, the CUSIP number is preceded by a prefix of CO for corporate, MU for municipal bonds, or TR for treasury. You can also sort by the top column, including next payment date. Bonds are often long dated and do not mature within an SMG session, but you can look for a bond that has a coupon within your game session. If you hold the bond on its coupon payment date, you are the holder of record and receive that coupon payment. Finally, click Trade if you wish to trade the bond. If you know the CUSIP of the bond you wish to trade, you can enter the CUSIP number with the correct bond prefix to validate the bond and trade. Remember, add CO for corporate, MU for municipal, or TR for treasury, and click Validate Bond to ensure that it is the right security. Corporate and municipal bonds can only be purchased or sold in $1,000 increments, and treasury bonds can only be purchased or sold in $100 increments. For example, let's go ahead and buy $1,000 in a municipal bond. Select Buy and enter the SMG bond prefix and CUSIP. Next, we'll click Validate Bond to check that we're trading the right security. Municipal bond orders can be bought in increments of 1,000. So let's enter 1,000 here. Then click Preview Bond Trade. Review the information on this page to make sure it's correct. Then enter your password and click Confirm Bond Trade. You will then see a trade order confirm message with information on where to view the transaction in the Pending Orders page. Bond trades always execute at the end of the business day. So if you enter a bond trade during market hours, the trade will appear in pending orders and execute at the end of the business day. If you enter a bond trade outside of market hours, the trade will execute at the end of the next business day. You can access the pending orders page by hovering over trade and clicking pending orders. After the trade executes, a record of the transaction appears in transaction notes. You can access the transaction notes page by hovering over trade and clicking transaction notes. Question to consider: what is a CUSIP? Thank you for watching.
Okay. All right. So that's a little bit about bonds and how they work. Now, during the life of our classes and the game, really, kind of one of the things they did mention is that it would be pretty hard to find one that's going to mature during the course of our classes. But nonetheless, wanted you all to understand how bonds work, how they fit into a person's portfolio. So typically when someone or you work with an advisor or whoever it may be, they'll talk about asset allocation. And so sometimes you'll hear folks say, looking for a 60-40 allocation, or a 70-30, or 80-20-20, different types of asset allocations. And what they basically mean by those numbers is the percentage as to what they would be putting into different asset classes. So, for example, someone who has a longer time horizon, meaning when do I actually need to use the money, and also maybe a higher risk tolerance, meaning I'm okay, I have time if I saw a lot of volatility in my account, because once again, the higher the risk, the higher the gain. So my asset allocation may be 70-30, meaning 70% in stocks, 30% in bonds. And so typically bonds would reflect the less volatile, safer portion of my account, and versus the stocks would represent the more volatile, the more growth portion of my stock. So just to keep that in mind. So, sometimes you'll see 60-40. Once again, it's just 60% stocks, 40% in bonds. Sometimes you'll hear people say 80-20-20, 80-20. They're doing 80% in stocks, 20% in bonds, and different types of allocations. And even within that, they could be broken down even further, where folks may have a certain amount of cash, they may have bonds, then they've got those stocks, and then they may have some other things like alternative investments and other type of investment vehicles. So those are some different avenues there. So wanted to jump in real quick and just show everyone, maybe just run through what our portfolio has been doing. And let's see, let's log in. We only have a few more minutes, but while I'm doing that, do we have any questions? No, no problem. All right, so logged in here. So kind of just wanted to show what you should be seeing in your portfolios when you log in. So when you log in, once again, on the home screen, it's going to bring you to account information, account summary, what stocks are long in the account, mutual funds, all the different types of securities that are in the account, as well as what's important you want to look at is your net gain. So it's been a rough week for the market. There's some turmoil in some of the banking stocks. So once again, that potentially has dragged down a lot of the market, because whenever there's one event, it potentially affects the entire stock market. So keep that in mind. You can easily also kind of scroll down and see what your portfolio has been doing from week to week, and understand what's going on there, as well as be able to look at other tickers and other information on the stock market. Okay. Once again, just to go back to resources, outside links. So if you wanted to look up and get more information on bonds, once again, that's the Emma site right here. You can also go on Morningstar and look up bond information also, okay? And once again, that's corporate. I'll start from the hierarchy really. So government bonds, treasuries basically. Then you've got municipalities, so basically your local government. And then lastly, corporate bonds. And then once again, the higher the credit quality of the bond just tells you the more secure, how secure it is. So any bond that's triple B, 3 Bs or higher is considered investment grade. Any bonds below that are considered speculative, or they used to call them junk bonds also. But doesn't mean that they're 100% junk. That just means that they do have a more risk associated with those bonds. So once again, the higher the risk, the higher the reward. So because they have higher risk, they're going to pay a higher interest rate on those particular bonds. So with that, I'm going to stop sharing. And once again, just see if there's any questions before we dismiss a little early today. I'll give you 5 minutes back, but any questions out there for us? No. Well, it's been great. Once again, we've only got a few more classes left. You need to make sure you come to the classes on time. Isaiah, I see you with your hand raised. Do you have a question?
Yes, I do have a question. So if something bad happens in one part, does it affect like things that aren't even related to it? Like if something was like in like a supermarket, would it affect like clothing stores and stuff like that?
So, and repeat the last part of the question.
It's just an example. It's like if it was like a candy store, would it affect a clothing store type of thing? Like how closely connected are different types of companies?
So they definitely could affect each other because a lot of things touch each other when you're talking about stocks, because there's some things as well as what's called consumer sentiment, meaning how comfortable, how confident am I in the overall market. There are other things as well, CPI, Consumer Price Index, and as well as labor markets. Okay, so those things kind of help to gauge if economists think we're going into a recession or not. And so those things could affect the entire stock market. If one company is a supplier of another company, so if we go back to the example with Best Buy and with the TVs, and once again, this is just an example, fictional. It would be that if they're wanting to, if their TV supplier is not able to provide them with the TVs, then what goes into the TVs, chips. So then that might be Microsoft, that might be NVIDIA, that might be other additional companies. So on one end, you see Best Buy getting taken down as a TV, selling because they don't have TVs to sell to help boost their earnings. But on the other hand, they have a supplier issue. The supplier is also not able to sell their product, so they're not making any money. Then the people that help put the components in the TVs aren't also able to make any money because the TVs that they're selling aren't selling. It's not going to the retailer to sell. But then also they are the actual supplier to Best Buy. The supplier now isn't buying new components because they haven't sold the TVs to Best Buy. So it's definitely a domino effect that could happen. So there isn't really a way to like insulate that particular stock from another. Because once again, if there's a supplier issue or a quality issue, it could definitely have a ripple effect throughout the entire stock market. The other quick thing is that when they say how's the market doing today, and they'll say things like the Dow is up 300 points or the S&P is up 25 points, or they'll say the NASDAQ is up 50 points. These are all broad gauges of the market. And so depending on how large the company, they may have a certain weighting on that particular index. And so if they have a pretty big weighting in that index, they're going to drag that entire index down. So that's another thing to consider. So definitely a lot of things touch each other. They definitely always will. But once again, that's why you do your analysis. That's why you look at ratings. That's why you look at what other economists and what other folks are saying about those particular stocks. Because once again, you could buy something because you like it. That's great. But you definitely want to then dive deeper into making sure that that's the right company. You may like it, but there's maybe a better company out there. So with that, I want to wish you all a great Saturday. Thanks for coming. Make sure you're here next week and we'll have some more information and have a lot more fun. All right. Thank you. Thank you, Rhonda.
Bye-bye, everybody. See you next week.
Bye.
Have a good day.
Bye.
Bye-bye.
Thank you.
You're welcome.